Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the financial results of two of our Canadian-owned but locally listed banks within the Trinidad and Tobago Stock Exchange and operating in the region. Of course, we're talking about CIBC Caribbean, as they were recently rebranded, but currently FirstCaribbean International Bank, as well as Scotiabank Trinidad and Tobago. Now, both groups would have reported improved earnings. Let's take a look at how those banking giants would have fared and what investors could expect in the coming months ahead. Turning firstly to FCI or FirstCaribbean, well, the group would have reported an earnings per share figure of 35 cents TT dollar equivalent, which is a 24% increase from the 28 cents TT equivalent recorded in that prior comparable period of fiscal 2023. Total revenues were up just a very modest 0.8%, so relatively stable, in fact, from 1.217 billion to just about 1.227 billion TT dollars equivalent. Operating expenses, however, did decline 1.5% from 708 to just under 700 million TT equivalent, with one of the major drivers for that improvement in earnings also arising from a credit loss release of 85 million TT dollar equivalent versus a credit loss expense in the prior comparable period of 6.9 million TT equivalent. Overall net income attributable to equity holders improving that 23.8% from 446 million to just about 552 million TT dollar equivalent. Now, when we take a look at that revenue story, we can see that the first quarter of 2023 was very significant in terms of revenue growth, up 27.7%, and that was on the heels of very sharp increases in U.S. interest rates, and that would have supported interest earnings or revenue earnings for the group in the first quarter of 2024. However, not to the same extent in terms of rate of increase. So we see net interest income up just around 2.5% from 861 to 883 million TT equivalent. However, other operating income down from 357 to 344 million TT equivalent, just about a 3% decline there. So net interest income just helping to offset that decline in other operating income to lead to some modest revenue growth for that first quarter. From a profit before tax by segment perspective, the group's corporate and investment banking segment was up 18% from 410 to 484 million TT equivalent. Personal and business banking in that green column up over 120 odd percent from 41 to 92 million, with a 10% odd decline in its smallest segment in terms of PBT contribution. Wealth management slipping from 19 million TT equivalent to just about 17 million TT equivalent. Now, when we take a look at FCI, excuse me, in terms of valuations from a price to earnings ratio perspective, it is currently, based on its earnings levels, one of the cheapest stocks, or the cheapest stock based on this relative valuation metric in the banking sector, trading at a 6 times earnings versus some of the other banking sector stocks trading at a range of 10.6 times to 19.5 times on the most expensive or relatively expensive valuation metrics. So at a price of that $7.04, again, FCI is trading at that 6 times price earnings ratio, well below the sector average of just about 14 times, and offers investors a fairly attractive dividend yield of 4.7% compared to the banking sector average of 3.8%. And of course, FCI does pay its dividend in US dollars, so an additional attraction there for investors looking for a TT dollar investment that is generating US dollar cash flow. So on the basis of stable to modestly growing revenues, those very attractive valuations, and of course those US dollar dividend payments, Bourse is going to maintain its overweight rating on FCI for the time being. Turning very quickly to Scotiabank Trinidad and Tobago, well, the group would have reported an earnings per share figure of 93 cents per share, which is a 3% increase from the 91 cents recorded in the prior comparable period. Overall, total revenues up just around 4.4% from 461 to 481 million. Contributing to that, excuse me, would have been an increase in net interest income from 327 to just about 346 million dollars TT. And overall profits after taxes, of course, improving that 2.9% from just around under 160 million to just about 164 million TT in that first quarter. When you take a look at Scotia's revenues, well, there has been a topsy-turvy trend in terms of revenue in this first quarter of first fiscal quarter for Scotia. We can see that a modest decline in revenue in the first quarter of 2023 of 2.9% was followed by that improvement of 4.4% in revenues in the first quarter of 2024, driven by a roughly 5.8% improvement in net interest income in that blue segment from 327 to 346 million, with relatively stable other income hovering at around that $155 million mark. So when we take a look at dividend yields across the banking sector, we can see that Scotia is at the lower end of things, but still slightly above the sector average, trading with a dividend yield of 3.9%. Again, in comparison to some of the more heavier dividend offering or dividend paying banking stocks, with Citizens Financial Holdings, for example, FirstCaribbean and RFHL, all well above that 4% level. So at a price of $72.89, again, Scotia is trading at that price-to-earnings ratio at the more expensive end of the relative valuation scale of 19.5 times, again, above that banking sector average of 13.9 times, and offers investors a dividend yield of 3.9% above, or pretty much in line, actually, with that dividend yield for the banking sector of 3.8%. So with increased net interest income in mind, keeping an eye on those higher non-interest expenses, continued healthy dividends, but of course, those elevated valuations, Bourse is going to maintain a market weight rating on Scotiabank, Trinidad and Tobago for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. Stay safe. See you next time and happy investing. We'll see you again on the Bourse Report.